Hello, and welcome to the April Economic and Market Update from Commonwealth Financial Network. My name is Brad McMillan. I'm Commonwealth's Chief Investment Officer. March marked a strong end to a healthy first quarter for stock markets. Large company stocks, including the Dow and S&P 500 here in the U.S., showed gains of between 4 and 7% for the month and 6 and 8% for the quarter, while developed markets abroad showed lower but still positive returns for both periods. Riskier assets lagged, including the NASDAQ and emerging markets, with the NASDAQ up slightly and emerging markets down for the month, but both up between 2 and 4% for the quarter. While stocks did well, bonds were down slightly for the month and the quarter, an unusual result due to rises in interest rates. What drove all of these returns was the significant improvement we saw during the quarter in pretty much everything. On the medical front, we started the quarter with the third wave underway and with no one vaccinated. And we ended with the third wave over, and almost 3 out of 10 having had at least one shot. On the economic front, we started with an economy still shut down as stimulus expired. And we end with one that's reopening, with hiring rising fast and with confidence on the mend. The difference between now and then, and even more in the prospects over the next several months, is very real. In March alone, for example, vaccinations here in the U.S. almost doubled for the second month in a row, and hospitalizations were down by almost a quarter. As the medical news improved, so did the economic data. As states reopened, hiring rebounded and layoffs dropped. Consumer confidence shot up to post-pandemic highs, and business confidence remained above pre-pandemic levels. While terrible February weather hurt the quarter's numbers, the end result was still significantly positive, and that looks likely to continue. And that's clearly what markets are expecting, because despite some recent turbulence, markets closed the quarter at or near all-time highs. Markets look forward, not back, which explains the continued rally, and is a positive sign for the rest of the year. Now, we're not completely out of the woods, of course. Although case growth was down significantly during the quarter, it stabilized in March and showed signs of rising again. More contagious variants continue to spread here in the U.S., and other countries are also seeing new waves of the virus. More, although hiring has picked up and the economy is healing, there's still millions of people out of work. We still have a lot of work to do to both contain the pandemic and to get the economy back to full health. But despite those risks, there are also a number of positive factors. Hiring progress during the quarter was significant, and with better weather ahead, those numbers are likely to improve even more. Federal stimulus checks should help push consumer incomes and spending up, and rising confidence will also be a tailwind for the economy. Finally, the already strong housing market should get a further boost as spring continues. The economy is healing fast. As we move into the year, risks are still there, especially over the short term. But looking forward, we can see something like normal not too far away. While the pandemic is still with us and a more contagious version of the virus might still appear, for the moment, we're through the worst of it. On the economic front, between reopening and the next round of stimulus checks, economic risks have come down significantly, and growth should accelerate as the economy fully reopens. We're still on track to get back to something like normal within the next several months. And that's what markets are seeing. While last year ended on rising risks, this past quarter has seen those risks peak and start to decline. We will get there, although we do still have a couple of months to go. That's it for this update. Thanks for watching. Join me in May for the next monthly update, but until then, be sure to check my daily blog, The Independent Market Observer, for more timely comments. Stay safe, stay sane, and stay healthy. We are getting through this together.